All right, let's jump into it. It is 9:53 on Friday, the 20th of February. Look, as I have done a fair bit recently, sort of start off with gold because this is really shaping up to be quite an interesting sort of trade at the moment, and I don't think it's so clear cut that everybody sort of thinks. And of course, the theme for gold, realistically, I would say maybe there's been 1 or 2 weeks here and there, but pretty much the last 6 months, 8 months or so, for a long time. A long time in this FX world or commodities world anyway. The theme has pretty much been buy gold up into the weekend. And that's because we've had so many sort of like little headlines that come out. They seem to come out sort of like, Saturday, Sunday, these kind of things. And so the idea is basically sort of protect yourself because there's most likely going to be some sort of headline over the weekend and, hold your gold and maybe you get a spike up through on the Monday. And at the moment, obviously, sort of we've got the Iran situation sort of kicking along. And the headlines are, and again, if we're moving just off the headlines, whether you believe them or not, like not to sort of I'm not sort of tinfoil hat enough to sort of say that, hey, it's all completely made up. But I am in the belief that maybe it is over exaggerated at times as a narrative to sort of like help sort of drive and push the market a little bit. And anyway, the point is that they're saying that, look, Trump hasn't given the go ahead, but could be ready to strike as soon as this weekend on Saturday or so. Saturday, Sunday, yes, whatever, over the weekend. So, given that, you would expect gold to stay reasonably bid into the weekend, and that's pretty much what we sort of saw yesterday. As the sort of headlines have chopped back and forth, obviously, hey, everything's okay. Hey, no, actually, not. It's not okay. Military building up, yada yada. I'm just sort of going through as I sort of pointed those out of candles because the whole thing's a little bit ludicrous. But we did sort of see yesterday, obviously, hit into a bit of a zone. So we found a little resistance where the market's going, hey, look, we get it that this is happening, but for the time being, this is where we're happy to, so take profits and not move this forward. And we'll jump onto a lower time frame. It was fun because you can actually see this. I'm not a Elliott Wave sort of person, but more or less 1, 2, 3, 4, 5. That was a perfect little 5 wave up here. A, B, C. Is that how it works? I don't know. As I said, I'm not really so much of that, but what I do know is that sort of like we had that sort of extension sort of moving up through here. We found resistance, second test of it, and now we're sort of obviously sort of consolidating sideways sort of through here. So, Elliott Wave, ABCs, this kind of stuff aside, what I would sort of kind of be looking at here is obviously we had this little sort of channel moving up here. Now, it's not a major channel. It's only on the 1 hour here. I mean, if on the 4 hour, kind of gets a little bit choppy in that. But from the 1 hour, it has sort of broken. And then it's retested the underside. This little second push down here, because if you think about that sort of little three-wave structure that we're always sort of doing, find resistance, support, support, previous resistance, you tackle the highs, break through, cycle starts again, bang, bang, and then sort of coming back down here. What we have seen now is a change, just for the point of doing this, or sorry, for the point of emphasizing this, I'll just change the color. Um, oops. We have seen more or less a double top, call it that. So it's not really like, okay, like if we're looking at just this extension move up here, is this move going to keep continuing up? That's the question. Or is it going to roll over and sort of come back down towards this side over here? Not necessarily breaking lows or anything like that, because again, all the moves are relative to the time frame, and this is on the 1 hour time frame. So you're not looking for a daily turnaround using the 1 hour time frame. But intraday trades, we're certainly sort of looking for, is this going to potentially come down? And then we can look at previous levels where the sort of, where the sellers have been. Are they going to become the buyers? Are they going to come in here, and then sort of come back in over here? I think downside, that could be an area. So potentially, even if you do want to go long, and we see a little bit of a break to the downside here, this could be a better option than buying it while it's consolidating. And that's technically as to where it closed. I mean, look, it's end of the day. sort of end of the session. So it has, you don't really write too much into it. But as it is at the moment, you put in a lower high. So I think the idea is that basically on a low time frame, the 1 hour here was potentially seeing this could move into a bit of a range here. And then obviously we wait for a bit of a sort of break of this range. Or a move like this to have a lower break. And that could give us a little direction through here. The market is opening now. Oh no, it's just Aussie moving. So basically, as I said, look, we've got the momentum. It's kind of stalled for the time being, potentially into a bit of a range, potentially into a lower high. So the fact that you've sort of broken this range, you've retested the underside, it does lean to the idea that we probably may see a little bit of cooling off. Now, as I said, it doesn't mean necessarily that the whole game, the whole game's over. But I think sort of a close underneath 70, we could be looking back down into the 30s. So again, like because it's quite choppy through here, even a break up above sort of like 50-20, you're running into 50-50. So the trades aren't necessarily going to be sort of monster levels here. Like you're going to have to do a little bit more work above sort of say 50-50, close above there to then really be challenging the highs over here. And likewise, sort of even if you break down through here, there's a good chance, given as I said that the theme is to kind of buy gold into the weekend, particularly while we're hearing headlines that the war could be kicking off or US could be attacking as soon as Saturday. Most likely any dip down here will be bought up here anyway. So intraday trades certainly there's a couple of bucks to be made either side of these things, but I would say just given everything that most likely buy the dips down here or buy the breakout the top over here would seem to be the kind of play that we'd be looking at the moment. It's opened up and what are we? Small little bounce up here, but yeah, short term I'd be looking for a close above 50-20 or a close below 50-70. All right, so moving on. Just before I do though, actually, so as we can see, obviously it's just opening up and just bouncing up and down with it all. We have sort of found that obviously sort of Asia without China present have been, it's not sort of like dead, but as you can see, it kind of just drifts in one direction. This was Asia the other day. We had a little shoot down and then drifted up. Where was the other sort of open? This was the open through here, kind of just nothingness, and then turned around. I think it was about the end of, towards the end of Asia, sort of moved up. So, like, certainly we're not seeing any of these kind of explosive moves that we've been seeing for quite a while. It has sort of like really been a little bit more of a sort of slow drift, which is what kind of gold gold used to be. Of course, you need to account for the fact that now it's 5,000, not 2,000. So all the moves are technically one and a half what they used to be, just to be the same. But this is the kind of thing like a $20 sort of day now is still like, geez, wow, it's not moving at all, kind of thing. But anyway, the fact that it's sort of broken this channel leads me to think that potentially we do have at least maybe some options down here. But as I said, I don't expect to see anything too low down to these sides over here, just given that we do have, as I said, this sort of a rather situation sort of ticking on at the moment. And again, look, we're sort of seeing a move through here. I suppose if we drag this up through here for a channel, this could give us a higher sort of back test with it all, which again, we come in confluence with that sort of 50-50 area. So look, a break above 20, you're probably targeting the 50s, but I'd be surprised if the 50s break prior to it all. But we'll see. We'll see. It's opening up and moving up there a little bit as well. I think very much eyes on the dollar. Speaking of which, we'll jump onto the dollar because we did get that sort of break last night. Now, there was a couple of things. So through, yes, I won't bother going back all the way through all of this. But this is Wednesday morning here, and this is a perfect example of that sort of structural trade that I talk about. Because we got the move up, we found resistance, came back down here, and I said, look, you got to hold this level here. Why? Because this is where it was previous resistance. Now it's turning into support, and it did do a little bit of a chop around, and it didn't go in a perfect straight line. But once it took out these highs here, look at that explosive move up to the top here. Yesterday we had that sort of chop through it all. That's fine. We had the pullback. Now, so the pullback I was saying, I was looking for 75.50 to 75.55. So obviously, basically just filling this little wick area over here, hence the little buy zone here. It didn't even sort of get back to that. And so when you look at these sort of things and you sort of go and you're looking for back tests, silver was a great indicator of this kind of stuff. That when you see these back tests, structurally you want these things to work in the sense of, okay, well, people that were short, whatever, I'll stay short underneath this point. They're coming back here. Okay, I'll close my shorts. Closing your shorts, you need to buy back the position, and that adds to the buy position, the strength here. If this doesn't even get its back test, and I put a post up at the time, if this doesn't even get its back test to these kind of levels down here, it means people are just hey, look, close enough, good enough, I need to get out. Because why? Why do they need to get out? Because it's going up. And we're talking people that are moving markets. We're not talking sort of Joe Blow, you and I. We're talking about sort of people that are sort of moving markets here at a collective of stuff here. Because as you can see, didn't even get back to do that retest. And as I said, look, if it's starting to move up here now, and bang, moved all the way up. Where did it reject? 98. Can you see that on the screen? Sure, yeah, 98. So 98 is the number that we've been touting. This is the big time frame, higher time frame, or daily anyway, daily time frame that gives us this higher structural move. So again, it's a lot of this stuff's just repeating the same stuff over and over, and I get that, but like that's the whole point of this, is that now we have the buyers have moved up, they've shown their progression, they've moved up here, they've driven up here, we're meeting with the sellers just here. So what we can do now, because this has sort of come up and tested here, we can sort of drag a little line through here. Should the dollar fail from here, it doesn't mean it's dead, which could see gold upside, because gold is very much sort of taking advantage of any sort of little shake of the dollar. But the point is that gold, and probably silver as well, but obviously I was talking more about gold 2 seconds ago. Gold, they can't get major breaks without the dollar failing, in my opinion. So you need to get the dollar back down to these levels over here. And if it's getting back down to these levels over here, it means it's failed to produce this structure that we're looking for, moving up like this, and most likely you're going to be coming down a lot lower over here. So now, again, with these sort of things, when the structure starts to confirm, and this is confirmed by actually, putting in a test of this level over here. When you put in this test over here, we can now sort of put this line up through here for the sort of, ascending triangle. It means basically, okay, it's shown its hand. Now we've got confirmation lines. A close above 98 or a close under this rising support is going to give us our direction. So it's going to be that or that. Let's clean some of this up actually. There we go, we can do the line here. So the question now is, do we get another test down here and then sort of go up? Does it just actually just have a little consolidation around here and move up? Or does it come back down here and then sort of come down? So it's kind of like three sort of potential plays for the dollar here. Now, the fact that it's sort of come up here like this, boom, boom, and we've still got room to move in the RSI, this on the daily, I think this will be vital today. I think sort of realistically, you want to see this continued push. Look, it was fine that you get a rejection from this level. We kind of expected that you would get a rejection from this level. When you first time visit back to these levels after a while, very rarely, unless it's like sort of strongly news driven, will it go flying through. It was coming up and testing into these areas, and then we had whatever it was, jobless numbers last night from the US. Not a massive mover, but it is a weekly number. It's something that the market can sort of sink its teeth into. We do have PCE tonight. That'll probably be a bit of a driver, but again, we've also got the Iran thing sort of ticking on in the background, so we've got to keep an eye on that as well. So anyway, it's no sort of shocker that it took out the highs here and rejected down a little bit. What you want to see now is the same sort of thing. You want to see that these buyers, so let's get rid of that and turn that from a buy zone. It's called the buyers here. Buyers. You want to see that this buying pressure is continuing to push up, push up, push up. I.e., if you break this level down over here where we saw that little push off from yesterday's lows, then most likely you're going to be seeing a bit more of a drift, and we'll probably come back and maybe sort of test around these kind of zones over here, which comes in line with this sort of rising support, and also, which color was it? What color was I using? Get rid of this one. This sort of rising support, this horizontal, that's kind of your downside target, your make or break area, should this level over here fail. So should we go through 97, call it 97.50, you're looking down to 97.35, and that's going to be your make or break area. So for downside, that's kind of where we're looking. If this move here catches on and we see a drift down here. If we do see this drift down here, we're probably going to see metals pushing up a little bit, because the metals are very much taking advantage of every sort of little bit of dollar weakness. But at the same time, they're cautious with it because, as you saw, while the dollar was moving up, gold stopped its advance. I mean, gold's been moving up and dollar's been moving up through the week. But now that we're actually getting to quite a sort of definitive point with the dollar, i.e. sort of like, are we actually going to get this breakout and probably see a move up towards sort of mid 99s, gold stalled. So, you know, it's all very well that they both moved at the same time and that, and I've said it a couple of times in show, I work off well, I used to say 90-10 kind of thing, but that's probably changed a little bit more now, more recently, in that sort of 90% of the time they move inverse, and 10% they move together. But what we have sort of seen is obviously sort of as the dollar was really sort of pushing towards this sort of breakout level, gold's kind of just going, hold on, wait, let's not get too crazy. Let's not break out while the dollar's about to break out. And this is what I mean. The typical relationship is one of being inverse. And so I think if the dollar breaks down over here, we'll see gold advance. If the dollar breaks here, that's possibly when you're going to see gold through 5,100. I mean, that's obviously it's not a one-to-one kind of ratio, but this to me would be the dollar failing, as in like it's shown its hand now. We've got a support. We know where it needs to hold. We know where it needs to break. If it fails through here, most likely, obviously, your first test is coming down here, but I would say more likely that's going to be a big fail and we've got to come down there. So, as I said, it's shown its hand. It's got a little ascending triangle. It needs to capitalize on that. It's got one shot of a fail, which is down here, but it needs to find buyers and then move up through there because there's a higher daily sort of time frame structure. Break of this doesn't mean game over from there. But the thing is, it's sort of like if this does break up higher, and if we see a little consolidation here now and then break up higher, that's what's going to, I think, sort of like really weigh on metal for the top side there. So yeah, it's about using the kind of the two charts together really, because you know, I mean, this is why I've got like sort of 8 charts, 10 charts, something on my screen at all times, just so you can see the relationship between these things as they actually develop sort of through the session as well. Anyway, that's a whole sort of here and there. What we kind of want to see is obviously a break above this level over here. So let's, oh, look at that, that used to be a down alert. Let's call this one, okay, we're going to say major breakout, because this will be the second effort. So what number is this on? Oops. 98.10. So most likely what we'll see sort of with this move here is at least another attempt to this area here. So we may sort of get Asia get a little bit of a drift up and another test here. So if we get sort of, because one test is a little bit, you know what I mean, generally sort of you want to see the market, boom, boom, like this is it. It's the structural trade as we always find. So here's your resistance, you first move up, you find support, this will be the third thing. So most likely we're going to get this move here. So another probe of this area, of this 98. Now, this will be the tell, because if this breaks through, well, okay, fine, we know what the trade is, on with the dollar, probably gold to the downside, and away it goes. If we get another probe up into this area and it rejects, then the emphasis is back on sort of the lower levels of wherever it rallied from, or maybe down these levels over here, to potentially see that kind of trade. And you've got a little mini, well, you know, 4 hour, but, you know, intra-session double top, see a little bit of cooling, you see gold move back up. And this is how I'm sort of saying that, you know, again, this is just sort of playing things out. How could this happen? Well, you know, say we do get that sort of push a little bit lower on gold, a little bit down, which gold chart are we using? We do get this push down to these levels over here. Maybe we see a bit of dollar buying to probe that area. We see gold come off. If the dollar fails, flows back into gold from a little support area down here, and we see some buys happening up from those lower levels. This is just, obviously sort of playing scenarios out in my head of how these things could potentially happen. But most likely what we are sort of going to see is at least another attempt up here, which will be showing its hand within this little structure, and we're either going to get breakthrough, okay, on with the dollar, major breaks, and boom, we're moving up, or we get a rejection, probably more likely that we get a little second fail here, and then a move back down over here. Look, so many times in that last 6 months, the dollar has looked really good till it's not, and then bang, and the market just dumps it down. I mean, these three areas here couldn't do any wrong, and then bang, failed. Looking great, failed very hard there. So, it is a very tough gig to sort of see the dollar actually break out. It's not just a given sort of thing. It's almost a little bit easier this trade through here, getting up to this area, because as I said, we've seen periods where people have been, yeah, cool, let's buy the dollar, buy the dollar, buy the dollar, till it hits a major level, or kind of a level that it needs to break and hold and actually get a breakout, and then it fails very hard. So it's almost easier to sort of trade this part here than to actually get the confirmation. It's easier to get to the test than it is to actually see it sort of carry on and break through. So yeah, as I said, low confidence for this thing to actually break through at this point. But it is on a charge. It's got a little bit of room to move on the 4-hour RSI. It's got room to move on the daily RSI. So it's set up, but need to see that continued push of the buyers moving up like this and that. And certainly if it does sort of fail, short term, you need to hold above 97.50. But above 98, I think will sort of 98.10 will give us a sort of direction through there. All right, so moving on and have a look at a couple of the other metals. We've got silver. So silver, same sort of thing. It's at this level that could be quite significant. We could probably have to update this and sort of say, hey, get rid of this because it doesn't mean anything. We've got a bit of a falling resistance here, and you can see the sellers are applying, applying pressure here. It's a sort of tough one, isn't it? Because it's that breakout point, but it was that breakout point here. It does almost kind of look like a descending triangle. Now, I've, of the most part, been of the idea that silver is going to come down to these levels over here. And I do think it will, at some point, get to these levels down over here. Though in saying that, doesn't mean it can't do something like this and then down like that, and that's just picking a level out of the air kind of thing. But yeah, I'm open to the idea that these things are potentially not going to sort of be super quick sort of trade, sort of quick. Let's just call it easy. They're not going to be easy trades. Anyway, let's go back to something that's actually usable. What we are sort of seeing here is pretty much the sort of level that I said yesterday. Like if we get on a lower time frame here. We did complete that, even though it was a little bit of a zoop back to this level here. This was always going to be a tough zone for it. We've got the horizontal through here, hence these sellers here. Wow, they appeared again here. We've also got that sort of falling resistance, so it's a bit of a confluence to come through into this area here. So I think sort of certainly you can see as a pullback here, this is kind of trying to hold for itself, and then I think we can almost sort of put a little range above it here. Whoops, let's call that a time frame zone. Yeah. Not a major zone here, but a confirmation level. And I think this will be able to sort of give us a bit of an idea of what this is going to happen here. So we got a down candle through here, and I think we see this thing sort of probably drift down a little bit more. And then we have a sort of little up candle, so I'll close above this top side over here, and I think that could give us a little bit of upside confirmation. So, not anything sort of super profound with this, but as we can see, it is coming and finding sellers resistance at this sort of point, in pretty much right on point as to where, I would say it would. It's consolidating through here. There's a chance, obviously, that this pops here. Now, if it pops up here, so obviously, you got these sort of short-term little, you still got the sellers at this zone through here. So you want to see a clear breakthrough of this zone here. So a close above 79.60. Takes you past this big falling resistance that we've had on this sort of last couple of big waves of the sell down, and then opens it up and potentially look, this will be your first target around the 80s, but there's no reason why you can't sort of come up and test some of these other levels here around 82 or so, which is $10 from where it was 2 days ago. And this is what I was saying. Look, I was saying to my father the other day that sort of like I do believe it's coming down over here, but it doesn't mean it can't do $10 rallies, and then a day later, well, we're $8 up on it or $6 up on it or whatever. So there is an argument for this thing to sort of come up a little bit higher. Again, the same sort of thing with gold in the sense of sort of buy the metals into the weekend. Gold's more the sort of traditional kind of thought that hey, look, gold, war, yada yada. But silver actually also, because silver's used in a lot of applications of sort of, I guess, drones and war stuff or whatever. I know I sound very technical with that, but the point is that silver does get a bit as well. It's not just gold into these sort of war times. And just a little caveat with this as well is if we think about what happened last time with Iran, which is only like what a couple of months ago, when they actually dropped, like literally when they dropped the bomb on them, gold sold off. Just to keep that in mind as well. So yeah, I mean, look, it's fine, and everybody, like as I said, almost like with the dollar, it's easier to sort of get the trade in the lead up, the anticipation, than it is to actually get the, oh, okay, war's kicked off, now we buy gold. Maybe the market then sort of goes, hey, I've already bought gold all week, I've bought silver all week. Your bombs dropped, that's great. You get a little spike because everybody thinks do that, and what do? Boom, sell into it, and then you see the move actually reverse. One, it sort of throws people off. They don't know what the hell's happening. You know what I mean? Sort of like, oh, but I thought sort of war, so we buy gold. And two, it's sort of they're just selling like buy the rumor, sell the news kind of thing. So it's not as clear cut as I think sort of some people sort of think that it's sort of like, oh, well, let's buy gold and because the war's happening. Anyway, whatever. That's beside the point. The here and now are these two levels that we're looking at. I think a close below so 70. Look, you do have a small little support through here, but it's not a major. I'd be more focused on this. So a close underneath 77.20 or a close above 79.50, I think should give us our direction. The downside move here is obviously the idea that this is a major falling resistance. These are okay because they're kind of little intra-session levels and all this. This is a major one. So the ramifications of breaking this are quite large. Like, you do potentially open up to quite a few buck move up to the other side. So they're going to defend it. Hence the one, the two, the three. If you have three attempts into this and it fails, i.e. the sort of close underneath sort of 77, full of 77, just a round number, whatever, close underneath 77, then most likely we are going to see a little bit of a sort of move back, and I wouldn't be surprised if we see a move back down to sort of like maybe 74 or so to sort of see what happens. Again, given the whole sort of factor of everything at the moment, I don't think we're getting major breaks with the war about to kick off, but certainly I think there's an idea that failure to move forward can result in a pullback, which means that you could potentially be looking for buy levels down over here, which is a level in which the market has bought it a bunch of times, tried to hold it, gave up, retested underside, only spent a minute or two underneath here, and it got back up over here. So I think certainly, like, there are sort of upside potentials, but should we see a break of this, I think a move back down towards sort of 74.30s would be a better buy option to potentially get that sort of long trade in there. All right, so moving on, have a look at Aussie. Aussie is very frustrating a trade, and that's I've been playing the downside through this period here, and frustratingly, I mean, we had the job numbers yesterday. Where are they, about here or so? And it kind of stuffed around a little bit, but then broke to the top side. Pretty much almost undid the whole move. Shot up again, took out the highs, took out the lows. It is just chop, chop, chop city through here. Um, let's just update this a little bit. So, with just quickly on that as well, this is kind of probably more a level in which you could say, hey, hold away, it seems to have respected a bunch of times, and this was a fake breakout here, fake breakout to the bottom side, coming back up, testing over here. Though, one thing I found, and this is sort of the long way round, and that was through trading gold when we had these sort of major breakouts in, I think it was either September or April last year, or wait, either one of those ones. I can't remember. It was a long consolidation period, and it did a couple of fake outs, and then I'm like, oh, but this is a fake out, so the breakout's going to here, and definitely it's going to be coming down over here. This is a perfect example of this kind of thing where you've got the line drawn, you get the breakout, it fails, and so you're like, okay, well, a failed breakout, that's going to equal a breakdown. Until I added to positions, coming down here, go to bed, that's cool, stops to even, bang, wake up, they're all gone. And it's just like frustrating as hell. Anyway, the point is, feel free to update the lines. Even though this did work for that moment and that was a fake breakout, um, and you could say that this line here has been respected a little bit more, and there's only one little tip over here. I think till this level gets taken out, which is also this horizontal through here as well, that's what's going to be more significant. I don't think if you maintain this line here and you say, oh, okay, but now it's above this line here, then it means we're going up higher. No, I don't think that sort of works with it all. So anyway, I'm sort of more free to sort of update these lines here a little bit more as well. Look, downside still remains the same. This level here, we did get that, obviously, the test down here. It was looking good. As I said, I went to bed and it was like, I think in the mid 20s or so. So around here, I woke up and bang, this stopped out. A close. This is the point. This is why I do these little drawings with these little candle things here, as to sort of kind of look like a candle. You want the close, and this is why I say it's important to, and when I write up the notes, I write, you want to close underneath these levels. It's not just enough to go down under it, because as you can see, here's your lows here, down, bang, move back up. It didn't quite get your close down under here, but this is our zone through here. And as you can see, it tested down underneath it, and then shot straight back up here. And again, this was at the same time that the dollar, even though Aussie's not part of the dollar, it's the broad market sentiment towards it. The market rejected that first attempt because it's a major breakout level. And look at how many times Aussies tested this level, and back over here as well. It was resistance, resistance, flucked around a bit, but now it's support, support, support. Should the dollar break out, I imagine Aussie to break down. I'm going to get rid of these sort of levels here, because if it does break, I'm not interested in buying the Aussie quite yet. I would say more likely, I would like to try and buy Aussie back down at these kind of zones over here. I think there's potential for quite a drastic breakdown should the dollar break out. At the moment, we are getting a little bit of a descending triangle. As you can see here, the bounce highs, bounce highs. This one tested pretty equal to it all, but now we're back to lower bounces high, lower bounce highs. So, should we sort of come back down here? That's the kind of course or the path that I'd be looking for. Again, maybe one more test, one more bounce, lower bounces. Because basically what they're doing is they're defending it, but the sellers are saying, hey, look, I've got a chance to get out, I'll take it. Didn't quite get to that, I've got a chance to get out, I'll take it. And so on and so on. So it doesn't mean that sort of like it can't, because more or less it is just kind of going sideways. So there is the argument, should we break through this now sort of updated falling resistance, that potentially, we could sort of drift back up towards 71, and we could start to see more or less just a big consolidation through here. But that's probably not my sort of base case. I'm probably sort of thinking more that we will sort of see the dollar sort of break out, which will lead to Aussie sort of breaking down. So that's the trade I'm looking for. However, as I said earlier with this, and this is how the importance of sort of using all these charts together, should we see another attempt higher with the dollar into that sort of 98 zone, and another rejection, and then a deeper peel off rejection down underneath 97.50, you can see that larger ascending triangle start to set up. Should that happen, well, that would probably be the trade to sort of maybe see that happen. But that's not the base case. That's more just sort of like, should that happen? So I said with the dollar attempt and show that the market's really not going to let it through 98 at this point, then I expect the dollar to sell off. Aussie's a very good candidate for buying it at the moment. As I've seen, sort of like it's got all the fundamental backings. It's got the the strong central bank outlook. They're hawkish. They're really talking the talk. They're saying, hey, look, you know what, we're going to be cutting more. If you just do that purely against the sort of rate differential kind of thing of it all, and also the cycle in which they're in. I mean, at the moment, the Fed's like, as I've said a number of times, they're between sort of hold and a cut. RBA is between hold and a hike, even more sort of leaning towards the hike. So that keeps it bid. That saved it from sort of coming down here while the dollar's been ripping, because the dollar's been ripping the last week. What's Aussie done? Sideways. And why is that? Because it's got the central bank backing. And the question is sort of like, is the dollar going to break out? Because if the dollar doesn't break out, Aussie's a great option, hence why it's still sideways. Now, if we had a central bank that was a bit more dovish, we'd be trading back down here in 69s. But we don't. We've got the sort of more hawkish central bank, so it's held up. But, as I've said a number of times, Aussie data, Aussie outlook, all this kind of stuff takes us back seat, a second tier, to what the market does with the US. And hence why we are still under pressure, even though we have the central bank sort of with a more hawkish outlook. See what I mean? It's sort of like it's good to hold you up while the dollar's in question, but if we see the dollar break down, if we see the dollar break up, the hawkish outlook isn't enough to hold Aussie and make it go higher. It's not like, say the ECB or something like this against the Fed. It's the RBA, which effectively is kind of like how we sort of think of the RBNZ. You know what I mean? Sort of, you don't really consider much of New Zealand. But anyway, the point is that, because we do have the central bank that's more hawkish, it's saved us from being down here already. The dollar's in question, looking like it might want to break out, so people are sort of covering themselves, hence this little drift down. So once the dollar shows its hand, that's when we're going to see our direction. The dollar breaks down, so you've got three outlooks here. Dollar breaks out, Aussie comes to the downside here. The dollar sort of fails, but doesn't completely break down, like, it goes into that double rejection, and maybe we see drift back to the ascending triangle. Aussie will get a little bit of a bid up. Doesn't mean it's breaking out. Now, the dollar completely breaks down, i.e. sort of comes back, breaks through that sort of ascending triangle. That's when Aussie will move up. Whoops. That's when Aussie will break out there. That is not the base case. This is a question. This is kind of what I'm looking for, but that's the sort of three outcomes of basically how I'm sort of seeing the Aussie play out through here. And again, it really comes down to a factor of sort of like, what the market's going to do with the dollar. And the fact that sort of like, we have that sort of central bank that's positioned the way it is, means that it's saved us already from being down here, but it doesn't protect us from being able to come down here should the dollar break out. All right. Anyway, all that said, that's the kind of trade still here. A close, let's say, look, a close in the 20s. Take out the low there. Close it. Let's just say a close at 70.20, just to sort of cover it. It's close at 70.20 for the downside. Top side, as I said, look, there is a possibility that this thing sort of drifts back up to 70.90 or so. I don't see this breaking out here till we get a definitive answer on what's happening with the dollar. I guess sort of like maybe we do have this sort of midway here that has sort of worked with it a little bit. But again, I'd be reluctant because obviously, as you can see, it sort of closed up above here yesterday and then sold back down. And even if you move up here, so I'm actually not looking so much to buy Aussie unless we can kind of get here, which, maybe a rejection from this level down here at 70.30 or whatever, might be a better option if you're looking to buy it. But the fact that we're dribbling down this way, the fact that the dollar's threatening a breakout, the fact that, you got the war thing potentially kicking off, I mean, typically that shouldn't be positive for Aussie because Aussie is a risk currency. So I think the path of least resistance is really sort of leading to the downside here. I think a lot's going to have to happen in the short term for the Aussie to get up over here. Doesn't mean that we can't come down here, things change, and then it comes up over here. But I think sort of more in the sort of immediate, it's probably leaning more to the downside here, and I'll be looking for that close underneath 70.20. All right, and moving on. So we've got Aussie yen. And so, look, this thing again on a bit of a charge sort of coming up here, and this is a good sort of indication, sort of like, you can see the buyers pushing up the pressure, pushing up the pressure, pushing up the pressure, came into this zone here. So this is where we kind of target 70 50, 70 50. So get stuck on the Aussies, on the Aussie dollar. I mean, 109.50s. That's like where we were kind of targeting. Why? Because this is where we're seeing the market sell it off previously. Came up into here, two attempts to go higher, set up the base here, and this is the kind of thing, as I said, like a pulls back, makes a new thing. That's it showing its hand. Here's the buyers. Gave us a good little level for this to break through, and then obviously came back down. Where did it come back down to? The same place that the buyers have been previously, and they held that zone there. And now we're kind of dribbling up the underside of this little channel. Again, this is on the 1 hour, so you're not going to get a full sort of turnaround of everything on the 1 hour, but we did have a nice setup of this here, which is a negative divergence into a resistance. So negative divergence, they can be a little bit tricky sometimes because, one thing I found more recently, you're getting three waves of these negative divergence. So as in, here's the negative divergence here, and then you're sort of coming up here. At the time, that was like that, like the RSI was here as we came into these highs here. Got the pullback, but then it pushed up here again, which then sort of confirmed that sort of RSI coming up a little bit higher. See the second wave, and that's the one that had actually paid off with. That sort of came in sub 80, or touching on 80, sub 80, and then we sort of saw the pullback here, and that was quite a decent little sort of pullback from the highs there, the 109.70, about 100 points or so, came back in 80.80. So this is very much the level that we can see that the buyers have held, buyers have held, buyers have held. Should we break through here, that's going to be your downside move. A sort of a lack of buyers here. We do have these little stepping stones here, so it could definitely have some sort of little trades along the way. But I would say sort of like if we do get a break below 80.80, that could be sort of signaling that we're going to see a bit of a move back towards 107.80. So it'll probably undo most of that move, I would say, back down to the zone over here. The interesting sort of thing, though, is if that does happen, that actually takes you outside the channel. And this is, again, like the point of using multiple time frames is we could see that sort of like, here's our little channel. This is a breakaway channel, by the way. This is our main trend back down here. So this breakaway channel, should this thing sort of come back down and test these lows over here at 107, 107.80, call it 108, whatever, that, a couple of things. One, it takes it outside this channel. But two, it also books in a lower high from this high structure over here. And then that could be opening the door to a lot more sort of downside here. And that's where I sort of think that potentially we could see some sort of weakness, despite, yen being continuously weak, and this thing looking like it's actually sort of, in saying that, looks like, wants to sort of push up here for a second effort. So look, it's not dead yet. As I said, underneath 108.80 is kind of where I'm looking for downside. Should you break through there, I think it's got fairly decent, downside targets to go down underneath here. Now, in saying that, here's 1, 2, 3. It's coming into its fourth sort of test. I think a close above this area, but ideally above 109.70, signals that we're moving up. And then you're looking up at 110 kind of thing. There's a little bit of a zone through here. Actually, have a look at this. There's a little bit of a zone through there. But realistically, there's some pretty solid targets up over here, and I would say most likely this may sort of see a reaction, but more a speed hump, and really you could be looking towards 110. Not necessarily the base case. I think the fact that this has broken this channel, even though it's on the 1 hour and it's dribbling up the underside. Remember gold the other day? It broke that channel, and then it still drifted up the underside here. So this is a very equivalent to sort of, break the channel. Then we had CPI, remember, on gold for the Friday, moved up like this, and then it broke down here. So my feeling with these things with channels, particularly with multiple closes on the outside of it, is that price needs to be punished. And if we look at sort of what happened with gold after that happened, this was gold here, broke, tested up higher, still on the underside, and then it broke and came down lower. It didn't completely sort of like demolish it, but it means that generally you're not going to see it come like this and then come back inside the channel. So if we get back to Aussie yen, this is pretty much exactly the same setup. Broke down, tested higher, it's still sort of outside here.
So I think certainly there is potential for this thing to sort of have a bit more of a sort of dance around these levels before any sort of future gains up over here. That being said, a close above sort of 109, yeah, 109, yeah, before we get to the 110, close above 109.70, then you could be seeing this thing continue on its way. However, structurally, I don't think this is about to go there. But could be eating my words, but that's how I kind of sort of see it at the moment. So I think there's more risk for this thing to sort of come back down to test at least 108.80. Look, if this holds again 108.80, maybe that's price punished and that's what it's shown, and it'll go into a sort of a sideways range through here. But as I said, I think that probably there's more risk to the downside with Aussie yen from this point.
All right, cool. That's it from me.